The overall market conditions continue to strike fear on a global scale as the concerns about the economic fallout grow recession fears, soaring inflation, supply chain shortages, and hawkish stance by the Fed are some of the key issues that generate a bothersome picture of the future outlook of the economy, turning our attention to the US stock markets. All three of the major indices were in the rest yesterday, 12th of July. Also, we turn our focus towards the earnings season with JP Morgan and Morgan Stanley releasing their second quarter results tomorrow, 14th of July, and Citigroup as well as Wells Fargo on the 15th of July. Alphabet, the communication services colossus, was in the reds yesterday. The fall to the current level in the past few months is correlated with the general theme of economic uncertainty surrounding the US stock markets due to inflationary pressures and the possibility of a recession, and more specifically, the company missing the earnings per forecast in the first quarter of the year. Turning our attention to news headlines, the much anticipated 20-to-1 stock split takes place on Friday, the 15th of July. The stock split is to make the price of the share more affordable, thus more attractive. The surge in positive momentum could in fact boost Alphabet's price on a high ground. On another note, the company's chief, Sundar Pichai, stated his plans to slow the hiring process, mirroring Microsoft's and Meta's perspectives on the matter. Furthermore, the antitrust probe backed by US Justice Department towards Alphabet would like to delay by the Senate as the sideline with other legislation. The legislation is intended to prevent the tech giants from favoring their own services over competitors and receive strong bipartisan support. Even though the general trend of the market points south, we hold a relative bullish outlook bias for the short-term horizon of Alphabet, specifically paying attention near the stock split event. Looking ahead, the upcoming earnings results for Google of quarter 2 will be announced on the 26th of July and should be kept under watch. Twitter, the social media giant operates the communication platform for public expression and real-time conversation, was in the greens yesterday. On the fundamentals, the Twitter Musk saga continues, with Twitter reportedly filing a lawsuit yesterday against Tesla tech billionaire CEO and mega Twitter influencer Elon Musk in an attempt to keep him from walking away from his $44 billion agreement to acquire the social media platform. This follows after Musk's termination of the accusation last Friday, where he stated the reason was largely due to disagreements with Twitter over the percentage of the accounts that are either fake, spam, or operated by bots. Needless to say, the saga is far from over. Twitter's price action year to date stimulates a roller coaster ride, and without a doubt, these erratic price movements have less to do with underlying fundamentals drives, but with rather psychological and technical influences, encouraging speculators to take part in the action. Google dropped in the latest session, yet that failed to alter the overall picture of a sideways movement. We tend to maintain a bias for a sideways motion. Given the fundamentals described above, we note that there is a substantial possibility for the share's price to experience extensive volatility. Should the share find extensive buying orders along its path, we may see its price action breaking the 2,393 resistance line and take aim for the 2,500 resistance level. Should a selling interest be displayed for the share by the market, we may see the price breaking the 2,260 support line, around which the price action has been revolving for the past 3 months, and move decisively lower to the 2,100 support level. Yet, for a bearish outlook to dominate, we would require a clear breaking of the 2,100 support line, thus paving the way for the 1,995 support line or even lower.